Welcome back. Today we're unpacking a really fascinating explainer on a topic that's pretty much dominating every single boardroom across the globe right now. Yep, you guessed it, artificial intelligence. I know, it's a bit of a shocker, right? Just another corporate meeting talking about AI. But listen, we aren't just going to sit here and throw around the latest jargon. Instead, we're looking at the hard, cold numbers. We're going to examine a specific company's financial data to see exactly how an aggressive AI-first strategy actually impacts the bottom line. Okay, let's dive into this and see what the data from the 2026 financial year actually reveals about corporate strategy and ultimately financial performance. AI first. Agile always. This is the actual corporate branding tagline pulled straight from our source material. It's punchy, right? I mean, it looks absolutely great on a billboard, and it sounds fantastic in a press release. But as focused learners, you and I both know there's often this massive, gaping hole between corporate marketing and actual operational reality. So we're going to treat this tagline as our central thesis for today. We're going to take this bold claim and validate it against their actual financial performance. Did putting AI first really force the company to be agile? And more importantly, did it actually drive measurable success? Which brings us right to the core mystery we really need to solve today. Does an AI strategy guarantee growth? It's an absolutely critical question because right now, AI is the ultimate corporate buzzword, isn't it? Literally every company out there is claiming they're doing it. But does just sprinkling the phrase generative AI into a shareholder report magically translate into a real financial turnaround? Or is it all just smoke and mirrors? Well, to answer that, we've got to look at the leading indicators, those early signs that a strategy is actually gaining real-world traction, way before the final revenue is even counted. Section 1. Expanding the sales pipeline, the leading indicator. All right, let's look at our first piece of operational evidence and examine the sheer momentum that really started building up during the 2026 financial year. Now, what's really interesting about this slide is the massive scale of that number, 27%. That actually represents the growth in the sales pipeline during just the final quarter of FY26 alone. I mean, seeing a massive 27% spike in just a single quarter, that tells us the market is responding super aggressively to whatever it is this company is selling. The momentum is just undeniable. But what exactly are they selling that's caused this kind of massive leap? Well, the answer is right in front of us. This 27% surge in the pipeline isn't just some random fluctuation or lucky break. Not at all. It is directly fueled by customers who are aggressively pursuing their own AI-led transformations. The company we're analyzing basically went all in on an AI-first strategy, and the market, it met them right there. Clients aren't just sort of tinkering or experimenting with AI anymore. They are fully adopting it to transform their entire operations, and they're bringing their massive corporate budgets to this company to help them actually pull it off. Section 2, Generative AI Revenue Boom, the Financial Payoff. Now, a strong pipeline is great. It shows incredible potential, but, potential doesn't pay the bills. Let's shift our focus to the actual recognized revenue within the Generative AI Business Services segment, or GBS. And this brilliantly illustrates the real climax of our story today. Notice the staggering difference in these metrics? Back in the 2025 financial year, GBS brought in 3,562 locks. Fast forward just one single year under this new AI-first strategy, and that revenue practically exploded to 7,866 locks. The segment's revenue literally more than doubled in just 12 months. This is exactly what we mean when we ask if an AI strategy guarantees growth. In this specific case study, the adoption of AI didn't just cause some tiny incremental bump. It caused an absolute explosion in top-line revenue for this dedicated division. But hey, top-line revenue is really only half the story, right? I mean, you can double your revenue and still go completely out of business if your costs quadruple. That's exactly why this pivot from red to black is perhaps the single most crucial takeaway in our entire explainer. Look at this. In FY25, this exact same generative AI segment was bleeding money. They were operating at a pretty steep loss of 1339 lakhs. They were obviously spending heavily just to build out the capability. But by FY26, not only did the revenue double, but the segment completely reversed its fortunes, posting a definitive, undeniable profit of 1,099 lakhs. Boom! This proves the business model is actually viable. They figured out how to deliver these super complex AI-led services efficiently and, more importantly, profitably.
Let's move to Section 3 and see how this builds a case for the future. Looking ahead to FY27, a sustainable trajectory.
Okay, so we've definitively proven the financial turnaround is real, but now we've got to ask the big question. Is this just a temporary one-off spike driven by, a sudden hype cycle? Or is it a truly sustainable trajectory? Well, the company's leadership certainly believes it's sustainable. They've actually issued a highly confident 12.5% growth guidance projected for the upcoming 2027 financial year. Now, releasing forward-looking guidance is always a massive risk for any company. If you miss your own targets, the market will absolutely punish you for it. So coming out with a bold 12.5% projection, especially on top of an already record-breaking year, that tells us leadership has a very high degree of certainty about what's coming down the pipeline. So the crucial point is understanding exactly where all that certainty is actually coming from. The company explicitly attributes its confidence for this 12.5% projection to two key factors, both of which we've actually already uncovered today. First, the continued, unyielding demand for AI-led services in the broader market. And second, the sheer strength of that current sales pipeline. Remember that massive 27% growth we looked at earlier? Yeah, that pipeline is the exact engine that's going to drive next year's recognized revenue. They aren't just sitting around crossing their fingers hoping for a good year. They've already done the math, based on the solid contracts currently sitting right on their desks. We started today by questioning a catchy corporate tagline. And honestly, the data has taken us on quite a journey. We saw a massive surge in the sales pipeline, a literal doubling of dedicated segment revenue, a spectacular turnaround from a heavy loss to a definitive profit, and a highly confident projection for the future. The AI-first strategy, at least in this specific instance, wasn't just some clever marketing gimmick. It was a highly effective, real-world operational blueprint. I want to leave you with this provocative thought as we wrap up. Look at your own organization, your own projects, maybe even your own industry. The data right here is proven. The financial payoff is very real. The only question is your business agile enough to actually put AI first? Thanks for joining me for this explainer. I really hope this deep dive brought some genuine clarity to the hard numbers behind all the buzzwords.